Hi, my name is Manny. I work at the Canada Revenue Agency, also known as the CRA. I'm very happy to be here today to talk to you about the disability tax credit and other benefits and credits that you may be entitled to. Given that we're meeting virtually, I wish to acknowledge that the lands on which I'm presenting from are a part of the traditional territories of the Niitsitapi and the people of the Treaty 7 region in southern Alberta, which includes the Siksika, the Piikani, the Kainai, the Tsuut'ina, and the Stoney Nakoda First Nations, which includes Chiniki, Bearpaw, and Wesley First Nation. City of Calgary is also home to Métis Nation of Alberta, Region 3. I also want to acknowledge the lands on which you're gathered from coast to coast and invite you to take a moment of silence to have a thought for the territory in which you find yourself. Today, we will cover the Disability Tax Credit, or DTC, and how to apply, benefits, credits, and programs you may be eligible for, which require a valid DTC certificate, including the Child Disability Benefit, Canada Workers Benefit Disability Supplement, and Registered Disability Savings Plan, or RDSPs. Additional benefits and credits that a valid DTC certificate can provide access to, such as the Multi-Generational Home Renovation Credit, Home Accessibility Tax Credit, Canada Caregiver Credit, and medical expenses. And benefits, credits, deductions, and programs you may be eligible for that are not dependent on valid DTC certificate. I will conclude today's presentation by sharing the different ways you can do your taxes, going over the CRA's digital services like My Account, and giving you tools to protect yourself from scams. The Disability Tax Credit, DTC for short, is a non-refundable tax credit that helps persons with disabilities or their supporting family members reduce the income tax that they may have to pay. A supporting family member can be a spouse or common law partner, parent, grandparent, child, grandchild, brother, sister, uncle, aunt, niece, or nephew of the person with the disability. The purpose of the DTC is to provide some relief for unavoidable additional expenses that result from living with a disability. It helps to offset costs that other taxpayers don't have to face. A valid DTC certificate is a requirement for accessing certain tax-related measures, including the Canada Workers Benefit, the CWB Disability Supplement, Child Disability Benefit, CDB, and the Registered Disability Savings Plan, RDSP. I will speak more on these programs shortly. To be eligible for the DTC, you must have a severe and prolonged impairment in one of these categories, significant limitations in two or more categories, or receive life-sustaining therapy to support a vital function. Impairments can exist in any of the following categories: walking, mental functions, dressing, feeding, eliminating, bowel or bladder functions, hearing, speaking, vision, and life-sustaining therapy. When we talk about eligibility, it's important to note that eligibility for the disability tax credit is based on the effects of the impairment, not solely on the medical condition itself. For example, let's say two people have the same medical condition and they both have a walking impairment. Over the same distance, one can walk at a reasonable pace, while the other needs a walker to walk very slowly while also stopping frequently to rest. Although these two people have the same medical condition, the impacts on one's daily life, what is referred to as activities of daily living, are different. A medical practitioner has to certify that you have a severe and prolonged impairment and tell us the effects of that impairment. Eligibility for the DTC is based on the information they provide. Your medical practitioner must also tell us the year you became markedly restricted in a particular category of the impairment. We'll explain the term markedly restricted later in the presentation. Please also note, even if you receive the Canada Pension Plan or Quebec Pension Plan disability benefits, workers' compensation benefits, or other types of disability or insurance benefits, you may not be eligible for the DTC. Each of these programs have other purposes and different criteria. The way to find out if you're eligible is to fill out Part A of Form T2201, Disability Tax Credit Certificate, have your medical practitioner complete and certify Part B, and submit it to CRA. As a result of new legislation, eligibility criteria for mental functions and life-sustaining therapy were updated for 2021 and future tax years. The list of mental functions necessary for everyday life was expanded. The frequency of life-sustaining therapy was reduced from 3 times a week to 2, for a total of at least 14 hours per week, and the list of activities that can be counted towards the 14 hours expanded. Applications for the 2021 tax year or later will be reviewed under the new criteria. Applications for the 2020 tax year or earlier are assessed under the previous criteria. This means, for example, that if you're applying for life-sustaining therapy for 2020 or prior years, the information provided by your medical practitioner on Form T2201 must show how you met the criteria that apply for those years. Also, anyone with type 1 diabetes now meets the DTC eligibility criteria for life-sustaining therapy for 2021 and later years. Medical practitioners no longer have to provide details of their therapy. However, they may still need to provide additional details if the applicant wants to claim the credit for prior years. For more information on the disability tax credit and the eligibility criteria, go to canada.ca/disability-tax-credit. Here are some terms we use when discussing the DTC. Market restriction. You may be eligible if you have a severe and prolonged impairment in your physical or mental functions, which impacts your abilities to perform the basic activities of daily living. A market restriction means that you are unable to do an activity, or it takes 3 times longer than someone of similar age without the impairment, even with the use of appropriate therapy, medication, and devices. The restriction is present all or substantially all of the time, and the restriction has lasted or is expected to last for a continuous period of at least 12 months. The medical practitioner must also provide the year you met the eligibility criteria. This is not necessarily the date a medical practitioner made the diagnosis, but rather when you begin to experience marked restrictions in a particular category of impairment. Life-sustaining therapy. In 2022, the legislation for life-sustaining therapy was updated, and the frequency of therapy was changed to twice weekly. Additional activities were also added to the activities that count towards the average of at least 14 hours a week. You must also have to dedicate time for the therapy. That is, you have to take time away from your normal everyday activities to receive it. This time includes the time you need to set up a portable device. There are some activities that do not count in the 14-hour per week requirement. Some examples include exercising, managing any dietary restrictions or regimes that are not listed as included in the 14 hours, and travel time to receive therapy. cumulative effects of significant limitations. To be eligible for the DTC under the cumulative effects of significant limitations category, you must have limitations in 2 or more categories, with the exception of life-sustaining therapy. These limitations must exist together all or substantially all of the time and have a combined impact that is equivalent to being unable or taking an inordinate amount of time to perform an activity in one category, present all or substantially all of the time, even with appropriate therapy, devices, and medication. Please note that when we say all or substantially all of the time, it generally means 90% or more of the time. There are 2 ways to apply for the DTC. The first is by using the DTC digital application process. The CRA recently introduced a fully digital DTC application process. This new process makes it faster and easier for you and your medical practitioner to digitally complete your respective parts of the application form. First, fill out Part A of Form T2201 online. Applicants can access the digital application form through My Account, and legal representatives can use Represent a Client. To get to the beginning of the application, go to Benefits and Credits page in My Account and select the Disability Tax Credit or DTC section. Alternatively, Part A can be completed over the phone using the automated voice service at 1-800-463-4421 or by calling a CRA agent at 1-800-959-8281. Please note that the DTC automated voice service can only be used if you're completing the application for yourself as the person with the disability. After completing Part A, you will receive a reference number to provide to your medical practitioner. Next, give the reference number to the medical practitioner. They will use it to complete and submit Part B of the digital form online. The reference number is required for the application form to be electronically submitted to the CRA. You can direct your medical practitioner to the digital application for medical practitioners, which can be found at canada.ca/DTC-digital-application. The medical practitioner will enter the reference number on the DTC digital application, answer questions about you and your impairment, certify and submit it to the CRA electronically. The CRA works to process applications as quickly as possible, and this new digital form can help you save time by ensuring it's complete with all of the required information. You can view the status of your application using the progress tracker in My Account. We encourage you to watch our recent webinar recordings on the DTC digital application process on canada.ca/individuals-video-gallery. One video is tailored to applicants completing Part A of the digital form, and another is tailored to medical practitioners completing Part B. You can also apply for the DTC by manually filling out a paper form T2201, which can be found on our website. When completing the T2201 manually, the following steps apply. First, fill out the sections of Part A that apply to you. If you want us to adjust your tax returns for prior years for which you may be eligible for the DTC, make sure to indicate it in Question 3 of Part A and sign Section 4. Then, take the form to a medical practitioner who can complete Part B of Form T2201. Ensure the certification section is completed and signed by the medical practitioner. And finally, submit the completed form. You may submit the completed T2201 electronically by using the Submit Documents feature in My Account or Represent a Client, or you may submit it by mail to your nearest tax center. Always keep a copy for your records. For more information on the Form T2201 Disability Tax Credit Certificate, visit canada.ca/disability-tax-credit. Medical doctors and nurse practitioners can certify all sections on Form T2201. Other medical practitioners can also fill out Part B of your form, but they can only certify impairments under certain categories. For example, an optometrist can certify vision, a speech-language pathologist can certify speaking, and an audiologist can certify hearing. To find this list of medical practitioners that can certify certain impairments, visit canada.ca/disability-tax-credit. Please note that the CRA never charges a fee to process Form T2201. However, your medical practitioner may charge you a fee to complete the form. You may be able to claim any fee you pay to a medical practitioner as a medical expense on your tax return. Once the CRA receives your application, the information you provided will be reviewed to determine your eligibility. You can track the progress of your application by logging into My Account. Once the CRA completes the review, you will be sent a notice of determination within 8 weeks. It may take longer if more information is required and your medical practitioner is contacted for clarification. If the CRA determines that you're eligible for the DTC, you can claim the disability amount on your income tax and benefit return. If you do not need the entire disability amount to reduce your income tax, you may also transfer some or all of the disability amount to the supporting family member you identified on the DTC application form. If your notice of determination indicates that you were eligible for the DTC for previous years, you can ask for adjustments to your tax returns. You may request adjustments for up to 9 previous years or the years indicated on your notice of determination, whichever is most recent. As we discussed, eligibility for the DTC is based on the effects of the impairment and not solely the medical condition. If your application is denied and you disagree with the decision or your medical condition changes, you can ask the CRA to review your file. Be sure to include any relevant medical information you have not already sent. Make sure to submit your request for a review within 1 year of the date of your notice of determination. Otherwise, you may have to send the CRA a new form T2201. As mentioned, after your DTC application is approved, you can claim the disability amount on your tax return. As the person with the impairment, you can claim the disability amount for yourself. A supporting family member of the person with the impairment may be entitled to claim the credit for a dependent or for a spouse or common law partner. If you are eligible for the DTC and are under 18 years of age or older, the amount you can claim on your 2023 tax return is $9,428. If you're eligible for the DTC and were under 18 years of age at the end of the year, or if you are the parent of a child who is under 18 and is eligible for the DTC, you can claim the supplement of up to an additional $5,500. Please also note that provincial and territorial disability amounts and tax credit rates are not the same as the federal amounts and vary among provinces and territories. A valid DTC certificate is a requirement for accessing certain tax-related measures, including the Child Disability Benefit, Canada Workers Benefit Disability Supplement, and Registered Disability Savings Plan, or RDSP. Let's start with the Child Disability Benefit. The Child Disability Benefit is for families who care for a child under 18 who is eligible for the Canada Child Benefit, CCB, and the DTC. It is a tax-free payment of up to $3,173 annually per eligible child. If you are already receiving the Canada Child Benefit for a child in your care who is eligible for the disability tax credit, you do not need to apply for the Child Disability Benefit. It will automatically be included with your CCB payments. If the child is determined to be eligible for previous years, the CDB will automatically be issued for up to 2 previous CCB benefit years. For years prior to that, a written request will have to be submitted to the attention of the CCB entitlement team at the tax center that serves your area. The Child Disability Benefit is paid monthly to the person who receives the Canada Child Benefit for that child. For more information on the Child Disability Benefit, go to canada.ca/child-disability-benefit. If you are eligible for the DTC, you may also be eligible for the Canada Workers Benefit Disability Supplement. The Canada Workers Benefit Disability Supplement is a refundable tax credit for low-income workers and their families. You apply for the Canada Workers Benefit when you do your taxes. Completing Schedule 6 will allow you to apply. If you do not complete Schedule 6, we will automatically calculate the CWB for you based on the information we have on file. If you are eligible for the DTC, you will receive the additional supplement. For more information on the Canada Workers Benefit and the Disability Supplement, visit canada.ca/Canada-Workers-Benefit. A Registered Disability Savings Plan, or RDSP for short, is intended to help persons with disabilities who are approved for the DTC save for their long-term financial security. Contributions to an RDSP can be made until the end of the year that the beneficiary turns 59. The government will pay matching grant and bond amounts to eligible beneficiaries on or before December 31st of the year in which the beneficiary turns 49. The government will pay a matching grant of between 100% to 300% into the RDSP, depending on the beneficiary's adjusted family net income and the amount contributed. An RDSP can get a maximum of $3,500 in matching grants in 1 year and up to $70,000 over the beneficiary's lifetime. For low and modest income families, the Government of Canada will also pay into the RDSP with the Canada Disability Savings Bond of up to $1,000 per year for a maximum of $20,000 over the beneficiary's lifetime. No personal contributions have to be made to get the bond. It will automatically be deposited into the RDSP of those beneficiaries who meet the income threshold. While you need to be eligible for the DTC to open a RDSP and make contributions, you will not have to close your RDSP if your DTC eligibility changes. The grant and the bonds are administered by Employment and Social Development Canada. For more information on RDSPs, visit canada.ca/taxes-RDSP. In certain situations, DTC eligibility provides access to additional benefits and credits, such as the Multi-Generational Home Renovation Tax Credit, Home Accessibility Tax Credit, Canada Caregiver Credit, and claiming medical expenses. Let's start with the Multi-Generational Home Renovation Tax Credit. This is a new refundable tax credit. It can be claimed on your income tax and benefit return starting in tax year 2023. If you are eligible, you can claim this credit for certain renovation expenses spent to create a self-contained secondary unit. This secondary unit must allow an adult 65 years of age or older, or an adult who is eligible for the disability tax credit, to live with a qualifying relative. You can claim up to $50,000 in qualifying expenditures for each qualifying renovation completed. The tax credit is 15% of your costs, up to a maximum of $7,500 for each claim you are eligible to make. For more information, go to canada.ca/CRA-MHRTC. The Home Accessibility Tax Credit is a non-refundable tax credit that you may be eligible for. You may be able to claim the Home Accessibility Tax Credit if you own a home in Canada and you paid for eligible renovations to improve the safety or accessibility of the home for yourself or for another eligible individuals. You can claim up to $20,000 each year in eligible expenses. This can result in a tax credit of up to $3,000. You may be eligible for this credit if you are 65 or older, or if you qualify for the disability tax credit. Or you may claim for a dependent if certain criteria are met. You can find more information on the Home Accessibility Tax Credit at canada.ca/line-31285. The Canada Caregiver Credit is for those who support a spouse or common law partner or a dependent with physical or mental impairment. The credit may also be claimed for an individual or their spouse's or common law partner's child, grandchild, parent, grandparent, brother, sister, uncle, aunt, niece, or nephew. An individual is considered to depend on someone for support if they rely on them to regularly provide some or all of the basic necessities of life, such as food, shelter, and clothing. When claiming the Canada Caregiver Credit, the CRA may ask for a signed statement for the individual from a medical practitioner showing when the impairment began and what the duration of the impairment is expected to be. However, you don't need one if the CRA already has an approved Form T2201 for the disability tax credit for a specified period for them. The Canada Caregiver Credit is a non-refundable tax credit. This means it reduces the amount of income tax the supporter may have to pay. You can claim eligible medical expenses that you or your spouse or common law partner paid for yourself and your children under 18 years of age. You can also claim eligible medical expenses paid for certain family members who depended on you for support and were residents of Canada at any time in the year. In terms of expenses, you can claim a wide range of products, procedures, and services, such as medical supplies, dental care, and travel expenses. But you can only claim the part of an eligible expense for which you have not been or will not be reimbursed. So, if you've received a portion of the cost you paid through an insurance claim, you can't claim the amount that was reimbursed. You should note that most claims don't require you to be eligible for the DTC. For more information on medical expenses and how to claim them on your tax return, visit canada.ca/taxes-medical-expenses. There are also benefits, credits, deductions, and programs you may be eligible for that are not dependent on a valid DTC certificate, such as the GST/HST credit, Climate Action Incentive Payment, Disability Supports Deduction, and Home Buyers Plan. Let's first look at one of the CRA's most common credits, the Goods and Services Tax, Harmonized Sales Tax credit, more commonly known as GST/HST credit. The GST/HST credit is a quarterly tax-free payment for people with low and modest incomes. It helps offset the GST or HST they pay on goods and services. To get it, all you have to do is file your taxes every year, even if you have no income to report. The CRA will confirm if you are eligible and how much you will get when you do your taxes. For more information on the GST/HST credit, visit canada.ca/GST-HST-credit. Just like the GST/HST credit, you may also be eligible to receive the Climate Action Incentive Payment when you turn 19. The Climate Action Incentive Payment is a tax-free amount paid to help individuals and families offset the cost of federal pollution pricing. It is available to residents of Alberta, Saskatchewan, Manitoba, Ontario, New Brunswick, Nova Scotia, Newfoundland and Labrador, and Prince Edward Island. It consists of a basic amount and a supplement for residents of small and rural communities. The Government of Canada changed the payment method for the Climate Action Incentive Payment from a refundable credit claimed annually on personal income tax returns to quarterly tax-free payments made through the benefit system since July 2022. The amount you receive depends on your family situation and the province you reside in. For instance, based on the 2022 tax year, a couple with one child living in Alberta could be eligible to receive an annual credit of up to $1,351. To get the Climate Action Incentive Payment, all you have to do is file your taxes every year, even if you have no income to report, just like the GST/HST credit. For more information on the Climate Action Incentive Payment, go to canada.ca/line-45110. One deduction that you may be able to claim on your return is the Disability Supports Deduction. A deduction reduces the amount of income you pay tax on, which reduces your overall income tax. If you have an impairment in physical or mental functions and have paid for certain medical expenses, you may be able to claim the disability supports deduction. You do not need to be approved for the DTC in order to be eligible to claim this deduction. You may be able to deduct the expenses you paid in the year so that you could work, go to school, or do research for which you received a grant. Only the persons with the disability can claim expenses for this deduction. For more information on the disability supports deduction, including a list of eligible expenses and how to claim them, visit canada.ca/line-21500. Another government program that can help you with your long-term planning is the Home Buyers Plan. The Home Buyers Plan is a program that allows you to withdraw from your registered retirement savings plan, known as your RRSPs, to buy or build a qualifying home for yourself or for a related person with a disability. This plan allows you to pay back the withdrawn funds within a 15-year period. You can withdraw from more than one RRSP as long as you are the owner of each RRSP. Your RRSP issuer will not withhold tax on withdrawn amounts of $35,000 or less. Certain conditions must be met in order to be eligible to participate in the Home Buyers Plan. Also, if you buy or build a qualifying home for a related person with a disability, or help a related person with a disability to buy or build a qualifying home, the individual with the disability must use and consider that home as their principal place of residence. For more information on the Home Buyers Plan, visit canada.ca/home-buyers-plan. There are a few ways to do your taxes. You can do your taxes online. This is the fastest way, as tax returns filed electronically are typically processed within 2 weeks. Certified software is available to make online filing easy, and some software products are even free. The tax software guides you and calculates everything for you. It helps make sure you don't miss out on any benefits and credits. Visit canada.ca/netfile. Please note, if the CRA does not have your completed date of birth on record, you may not be able to do your taxes online. Make sure to also sign up for direct deposit, so if you are eligible for a refund, you can receive it faster. Volunteers may be able to help you do your taxes for free. There are tax clinics hosted by community organizations across Canada for those with a modest income and simple tax situation. For more information, go to canada.ca/get-tax-help. You can also get help from a family member, a friend, or a tax preparer. Or you can download a tax package, fill out the paper forms, and mail them to the CRA. You must use the package for the province you lived in on December 31st. Filing a tax return by paper can take up to 10 to 12 weeks to process. To get a package, go to canada.ca/taxes-general-package. As I mentioned, you may be able to get your taxes done by a volunteer for free. The program is called the Community Volunteer Income Tax Program. In Quebec, it's known as the Income Tax Assistance Volunteer Program. You're eligible to have your taxes done through the program if you have a modest income and a simple tax situation. Generally, A modest income is less than $35,000 for a single person and less than $45,000 for a couple. Your tax situation is simple if, for example, you don't have a small business or income from a rental property. Tax clinics are held all year. However, most clinics are offered in March and April. Many secondary and post-secondary institutions across Canada already host their own tax clinics. If your school is interested in hosting its own clinic, reach out to us. For more information or to find a clinic near you, go to canada.ca/get-tax-help. Taxpayer information is confidential. The CRA needs your permission to deal with another person, such as a family member, friend, or an accountant who may act as your representative for income tax and benefit matters. You can give permission to another person in My Account or on paper by filling out Form AUT-01, authorize a representative for offline access, and sending it to the CRA. Make sure to choose someone you can trust. Remember to check your account if you have changed tax preparers or representatives. This ensures that only the people you want to have access to your account can do so. You don't need to authorize someone as your representative if that person is only doing your taxes. My Account is a secure portal that lets you view your personal income tax and benefit information and manage your individual tax affairs online. You can track your refund, view or change your return, view your online mail, such as your notice of assessment, check your benefit and credit payments and statements, and status of your DTC application, manage your direct deposit, change your personal information, view any uncashed checks, and more. Along with doing your taxes every year, you must keep your personal information up to date to keep getting benefits and credits. This includes your address, marital status, number of children in your care, and direct deposit information. You can update all of this information on your own through My Account. If you've already done your taxes for the current year or previous one, and it has been assessed, you can register for My Account. For more information or to register for My Account, go to canada.ca/my-CRA-account. In addition to My Account, there are many digital services available from the CRA. Here are a few that I'll tell you about. Autofill My Return is a secure CRA service that automatically fills in parts of your tax return with information the CRA has available at the time of your request, making it easier to do your taxes and helping prevent mistakes. Direct deposit is a fast, reliable, and secure way for individuals to get payments on time from the CRA in the event of unforeseen circumstances, such as a natural disaster or an emergency. Email notifications help prevent fraud. Email notifications from the CRA let you know when changes are made to your personal information in My Account, or there is CRA mail to view online. For more information on the CRA's digital services, go to canada.ca/CRA-digital-services. We would like to invite you to try out our online interactive tool called Learn About Your Taxes. Learn About Your Taxes is for students, first-time tax filers, newcomers, and anyone who wants a refresher on how to do their taxes. This online self-directed tool takes you through starting your first job, completing a basic tax return, the purpose of taxes, and much more. It has resources such as videos, common tax terms, lessons, exercises, and links to websites where you can learn more. There are also lesson plans for teachers and facilitators. The Learn About Your Taxes tool is regularly updated with new content. Go to canada.ca/learn-about-taxes to dive in and check it out. The learning tool currently has 7 modules and 26 lessons to help you through your tax filing journey. Each module takes you through the different steps of preparing for and completing your tax return, as well as what happens after. For instance, the first module, called Starting to Work, has 4 lessons and covers topics related to your SIN, when to fill out a TD1, and what's on your pay stub and T4 slip. More topics will be added in the future, including content on self-employed income and the gig economy. Throughout all the modules, you will find definitions of tax terms, examples, tips, and quizzes to put your knowledge to the test. You can also access our multimedia gallery with plenty of helpful videos and products. Again, this tool is constantly updated with new lessons, products, and other content, so be sure to check it out. You should always be cautious if you receive communication that claims to be from the CRA. It is possible to receive a direct communication from the CRA. We may, for example, need to provide you information about your account or ask you to clarify something you've shared with us. We will not ask for your bank account information, credit card number, or passport number, or use threats or intimidation tactics. Scammers often attempt to imitate the CRA to try to steal your personal information. They may target you by telephone, text, instant messaging, email, or mail. Here's how you can be scam smart. Never be afraid to ask why the CRA needs your personal information. When in doubt, check My Account or My Business Account to see if you have mail or any amount owing. You can also call the CRA to check on communications, and go to canada.ca/b-scam-smart to learn more. You can also check out our Be Scam Smart webinar on the individual's video gallery on canada.ca. I'll provide more details on this in a moment. And that's all for me. This is the end of our webinar. Thank you for joining us today. We hope it was helpful. Videos from our national webinar series can be found in the CRA's individual video gallery at canada.ca/individuals-video-gallery. We also encourage you to visit our upcoming events page at canada.ca/CRA-outreach-events to view past recordings and to register for upcoming webinars. Thank you for listening and enjoy your day.